Hey warriors, I hope you're all doing good. I know the exams are around the corner, and so ICA has also released the RTPs for you. Let's today discuss the MCQs which are there in the RTP for the CA final May 24 and November 24 exams. Now, two things which I wanted to tell you before I start this itself. Your MCQ guide has already been published, right? You have your MCQ guides available. For those students who want to get their MCQ guides, please do WhatsApp me on the number which is mentioned in the post which is there, and you should be able to get the MCQ guides from me. In this, what we are going to do is we are going to look at the additional MCQs which ICA has released through the RTPs. Now, there are also additional practice and theoretical level questions in this RTPs, but I'm not discussing those with you because the answers to that is already given in the RTP. My intention for today is very simple. I want to take you through the MCQs which ICA has released and give you the reasoning behind what they have made, because there are some very important MCQs which they have published this time, more so from the amendment perspective. Some beautiful level MCQs have come which will help test your knowledge on how do you understand the amendments of the current year. Keeping that in mind is what we're going to start for today's session. Let's kick off. Yes, this is how your new RTP looks like. It's all a little colorful and all. Until last time you used to get black and whites and all. Yes, ICA is also upgrading. Anyway, we start the MCQs. We have about 13 MCQs to go. In the 13 MCQs, 2 are case study questions. They've pretty much kept the same style of what your exams will also be. So let's keep that same thought in mind before we start this RTPs. My request to you is very simple. Don't jump to this video if you have not even opened the RTP yet. This RTP will be a beautiful mechanism for you to test and understand how your preparations till now have been. So first instance, please to go ahead and solve these MCQs on your own. Figure out what the answers is and then come to this video for looking at the reasoning behind it. Don't start with this video itself directly. You may lose the intention to practice yourself. Yes, so please do it yourself and then come back and look at this MCQs for your reasonings. Keeping that in mind, let's start the discussion. We are looking at case scenario number 1. It says the following details pertain to Mr. Sahil and his best friend Mr. Akhil. Now, since we are doing an exam setup, I'm going to follow the same format. I'm not going to read the case study. I'm directly going to jump and see what the questions look like. First question is saying, is HDFC Bank required to collect tax at source? So this is more of a TCS related question. Yes, this is more of a TCS related question. So we will solve it as a TCS related question later on. Let's look at the facts and then we'll figure out if there is any TCS related provisions to be understood. Yes. Second, is Axis Bank required to collect TCS? So second question is also TCS related. Great. Third question is tax required to be collected at source on the amount remitted for tour package? Again TCS. All the three people are Sahil, I'm assuming. Yes, Sahil and again Sahil. So all three people Sahil, they want TCS provisions. Okay. Then you have, does make your trip required to collect TCS on the amount required for Bali to Akhil? So Akhil also they want TCS. Finally, what will be the total income of Akhil and what will be the tax liability of Akhil? Now in total income they're saying he's shifting out of default regime. In tax liability they're saying doing the most beneficial manner. So we need to check both for point number 6, which means for Sahil and all we don't need to do tax liability and all. For Akhil we need to do tax liability also. Keeping that in mind, let's now read the question and see where we get stuck. They say the following details are pertaining to Sahil and Akhil. Mr. Sahil is a person who is remitting to his elder son Araf, pursuing 2-year MBA program from Columbia University, USA. Yes, you have a son in USA for whom you are giving some amount remittance for education purposes. This amount remittance has happened out of own savings through HDFC Bank, an authorized dealer under liberalized remittance scheme of RBI. First two examples were about HDFC, so this is the HDFC case. They're coming and saying, you have given 3,50,000 towards his tuition fees on 5/7/2023. Now notice the date, it is 5/7. The date is 5/7, which means this is pre-amendment regime. This is pre-amendment regime. In the pre-amendment regime, the provisions was that for the first 7 lakh rupees, there will be no TCS. And after 7 lakh rupees, you levy TCS at the rate of 5%. Yes. Now looking at 3,50,000, I would come and say, yes, Rahul, TCS would not apply. But the dates are where the challenge is. Let's notice the dates very carefully. This is happening on 5/7. Okay. Then they are saying to meet the day-to-day expenses for study purposes. Now see the dates. No, there is 5 also, there is 9 also, there's 1 also. The dates are jumbled up. We'll have to sequence this first. Yes. So let's keep that in mind. But anyway, point is what is happening is you have some payments which you're making to your son through HDFC. On 5/7 you have made 3,50,000 and on 10/5 1,20,000, 29,990 and 1/1 1,35,000. These kind of payments you have made. Then you have also made a payment through Axis Bank, an authorized dealer under remittance scheme, for a loan for tuition fees on 3,50,000 and 3,50,000, 11, 10 and 10, 1. And then you have also made an own savings payment of 1,50,000. Yes. So what is happening is you have made some multiple payments. Most of the payments are relating to tuition fees. So tuition fees, study purposes, and then you have payment happened for tuition fees again through a loan, and then you have one more payment which is for the day-to-day expenses. Notice the banks, two different banks. One is HDFC, one is Axis Bank. Now, technically, I would always come and say that yes, for both the people, 7 lakh will apply separately. 7 lakh will apply separately. HDFC will get a fresh 7 lakhs and Axis Bank will get a fresh 7 lakhs because it is a deductor collective specific. It is a collector collective specific items. But anyway, let's read the balance. It says, you've also, to complete the formalities of admission, Mr. Sahil has visited USA on 10/4/2023 to 13/4/2023, for which he purchased a tour package from Gate to Travel, a foreign tour operator, and has remitted the money under LRS on 5/4/2023. So this money has been remitted on 5th April 2023, pre-amendment regime. The international travel tickets and hotel accommodation are included in the said package. Amendment of current year clarified the tour package. 3 items are important. In the 3 items, any 2 out of the 3 has to mandatory be given. In this case, you are noticing 2. Therefore, this is a overseas tour package. Now, notice the date. It is 5 April 2023, which means the date being 5 April 2023. This is the pre-amendment regime. And in the pre-amendment regime, the rule was that for every overseas tour package, the TCS rate was at the rate of 5%. The TCS rate was at the rate of 5%. So I'm going to conclude this number right away. 5,20,000 into 5%, number is 26,000. I know there was one question relating to make your trip. This is Akhil. Yeah. So is tax required to be collected at source on the amount remitted for tour package to USA by Mr. Sahil? If so, what is the amount to be collected? The amount will be answer number A. TCS of 26,000. I'm solving it as we progress. Yes. Then it says, Mr. Sahil has furnished undertaking containing the details of earlier remittances to HDFC Bank and Axis Bank. He has also furnished his PAN number to the authorized dealer and to the seller of overseas tour package. Now, here is where the problem comes. I told you, generally what will happen is Axis Bank will get a separate 7 lakhs and HDFC will get a separate 7 lakhs because it is collector collective specific. But the problem what has happened is Sahil has went ahead and informed both the banks about what remittance he is making from each other also. Which means Axis is now aware about all transactions with HDFC and HDFC is aware about all transactions with Axis. Now here is where the challenge comes. In this scenarios, 7 lakhs will be aggregated together. 7 lakhs will be aggregated together. You cannot take 7 lakhs for each person. You have to give 7 lakhs for both included. Which means now you need to be careful about the dates. Very particularly, let's look at the dates. You are on 5 July on the 1st. Then you have 10/5/29, 1/1, 11/10, 10/1 and 1/7, which means the first thing I notice is this is the first payment. So 10/5 is the first payment. Second payment is on 1st July and 5th July. So these two are happening together. Then you have 29th September, 11th October, and then and then 1st January, 10th January. Yes. Why am I doing this, Rahul? For the first 7 lakh, there is no TCS. So I need to keep this in mind. Let's now check the payments together. My first payment happened on 10/5, 1,20,000. So I'm going to put on my calculator 7 lakhs minus 1,20,000. Next, second payment is 1,50,000 and 3,50,000. So reduce 1,50,000, reduce 3,50,000. I have almost about 80,000 left with me right now. Yes, out of the 7 lakhs, 80,000 is left with me. This 80,000 will now be used for my 3 lakhs payment. So which means I can come and say on the first payment TCS is 0. On the second payment TCS is 0. Going back to the third payment. Now the third payment has happened on 29/9. The third payment has happened on 29/9 and it is for the purpose of education. It is for the purpose of education, and therefore what will you do is you will come and say, Rahul, on this TCS will be at the rate of 5% after 80,000. After 80,000. So 90,000 lenda I will remove 80,000. Left off is 10,000 will be given a TCS rate of 5%. Will be given a TCS rate of 5%. Hello. Next, point number 4. This is loan taken for tuition fees. Now, the provisions of LRS come and say, the provisions of TCS come and say that if you have taken a loan under section 80 for the purpose of a foreign education, the TCS rate is not 5, the TCS rate is not 20, the TCS rate is 0.5. So this whole 3,50,000 will go at the rate of 0.5%. Next, 5. Yes, 5 is 1st January. Again on 1st January, what is this person done? This person has taken a payment for study purposes, 1,35,000. This full thing will be liable for 5%. And then you have point number 6, which is Axis Bank authorized dealer loan taken for tuition fees, again 3,50,000. This will again go at 0.5%. Yes, now these are all my facts. Question number 1 was about getting TCS from HDFC. Question number 2 was about getting TCS from Axis Bank. I know my HDFC now. HDFC first one was 0. Second one was also 0. Third one is 10 lakhs into 5%. Sorry, 10,000 into 5%. Number is 500 rupees. And the next one is 1,35,000 into 5%. Number is 6,750. Which means for HDFC Bank, I have 506,750 to be collected. Let's check the numbers. Is HDFC Bank required to collect tax as source on amount remitted by Sahil? First one is no. Second one is no. Third one is yes. Option is point number C. Option is point number C. Yes, if you put your structure properly, things will go smoother. Things will go smoother. Let's go back. Coming to Axis Bank. Axis Bank has 3,50,000 at the rate of 0.5%. So 3,50,000 into 0.5% will give me 1,750. Same 1,750 is on the bottom also. So therefore, I'm going to question number 2. Is Axis Bank required to collect TCS on the amount paid by Sahil? Yes. Answer is option number C once again. It is TCS of 1,750 on 11/10 and TCS of 1,750 on 10/1. Yes or no? Yes, please be careful about this. The only thing to be kept in mind here is that since both the parties are aware about the transactions happening, HDFC and Axis Bank together will get 7 lakh rupees and it is not individual cases. Now let's move to Akhil. It says Akhil is an Indian citizen getting a job offer from MS Wellbeing Inc., a Dubai-based company of AED 10,500 per month. So there is an Indian citizen getting a job offer from a foreign company, 10,500 per month is his salary. He left Dubai on 29 March 2023. Earlier previous year, not relevant for you. And has joined Wellbeing on 1st April 2023, which means from the first year of, from the first date of this year, you are in Dubai. You are in Dubai. He returned to India on 15th December 2023 on leaves for 15 days. So they have come and told 15 days he was there in India. Thereafter, on 23rd December, he went for a 7 days tour to Bali with his wife and his son out of India. Thereafter, he went to Dubai and with his wife and his son directly went to Dubai. So his Indian stay is only 15 days right now. His Indian stay is only 15 days right now. On 16th December 2023, he purchased a tour package from Bali, for Bali from Make Your Trip, an Indian tour operator, for which he paid 7,50,000 towards travel tickets and hotel accommodation. Now notice one thing very carefully. This person has taken an overseas tour package, 7,50,000 from an Indian person. From an Indian person. Does it matter, Rahul? No. Understand, the provisions of TCS come and say that these whole provisions are only applicable for a resident person. It's only applicable for a resident person. Right now, we need to check first of all whether the person is resident or not, because looking at 15 days, person looks like a non-resident. During the financial year 23-24, he has business income of 4,20,000 for a retail shop in India and interest on fixed deposit and savings account with Canara Bank of 1,20,000 and 8,000 specifically. He is not liable to pay tax in Dubai. He is not liable to pay tax in Dubai. At this point of time itself, most of the people will start jumping and coming and saying, Rahul not liable to pay tax in Dubai, which means he is a deemed resident. He is not a deemed resident. Notice carefully. Provisions of residential status come and say that first of all, you need to be an Indian citizen, which is satisfied. Second, they come and say that you should be an Indian income more than 15 lakhs. Looking at the Indian incomes, I am noticing 4,20,000 in retail shop, 1,20,000 in fixed deposit, 8,000 in savings account. No matter how you try it, it is not going beyond 15 lakhs. Therefore, deemed residency concept is not applicable. Deemed residency concept is not applicable, which means deemed residency cannot apply. Now, coming to the other scenarios, his current year stay has only been for 15 days. If his current year stay has only been for 15 days, you are not satisfying 182 days. You're also not satisfying the condition of 120 days, which means nothing is getting satisfied. Condition number 2 is also ignored for you, which means the person has ended up becoming a non-resident. The person has ended up becoming a non-resident. Now, you will come and say me, Rahul, if you notice on the top, there is a person getting Dubai income 10,500 rupees per month. Understand, 10,500 rupees per month of Dubai income. is a foreign income, is not deemed to occur or arise in India, will not be a criteria for your Indian income purposes. Will not be an criteria for your Indian income purposes, which means you cannot consider those. You cannot consider those. That will not be considered, and therefore this person will be treated as a non-resident. Now, keeping the non-residency in mind, since the person has become a non-resident, TCS will be 0. TCS will be 0. So I'm coming to, does make your trip required to collect TCS? Answer is no. Answer is no. There is no TCS happening on make your trip. Yes, some things for you to keep in mind. Critical points. Now, after this, all the incomes were total income related questions. So let's check your non-residence. In a non-resident scenario, the person is not liable for his Dubai income. The person is not liable for his Dubai income. You're now left with 3 incomes. Income number 1 is 4,20,000 of business. Then you have 1,20,000 from FD. And you have 8,000 from savings. Technically, your gross total income becomes 5,40,000 and 5,48,000. 5,48,000. Now, since question is saying that he is opting out of default tax regime, it simply means that he is eligible for Chapter 6A. Rahul, what am I talking about? I'm talking about Section 80 TTA. Section 80 TTA. Whether you are a resident or non-resident, any interest on savings account can be claimed as a deduction up to a maximum of 10,000 rupees. Since it is 8,000 rupees here, you will get the whole deduction of 8,000 rupees, resulting in an income of 5,40,000. Yes. So I am looking at the scenarios. Answer is option number B. Now, here is where the challenge starts. Look at question number 6. It says, what would be the amount of tax liability computed in the manner most beneficial for Mr. Akhil? Which means now they are coming and saying, Rahul, check for both the regimes. Now, in all practical purposes, since your income has not gone beyond 15 lakhs, normally speaking, your new regime or the 115 BAC default regime will do better. Therefore, without even wasting time, I'm directly going to default regime. In default regime, what will happen? You will be not given the 8,000 of Chapter 6A reduction, which means now you only have an income of 5,48,000. With your income being 5,48,000, for the first 3 lakh rupees, the tax is 0. For the balance 2,48,000 rupees, your tax is at the rate of 5%. So 2,48,000 into 5% will give me 12,400 rupees. Now, since you are a non-resident, you are not eligible for rebate. So rebate becomes 0. You have a tax of 12,400. On this, you will add 4% cess. Number becomes 12,896. If you write this answer that is wrong, it is 12,900 rupees, because you are going to round off to the nearest 10. Therefore, the answer to question number 6 should be 12,900 rupees. A very nice question, which is predominantly testing your TCS related questions. Balance 5 and 6 were quite straightforward questions. Your TCS related questions were nicely tested. Please to solve this once again and test your memory properly, because LRS amendment is a very short question in this exam. Yes. Let's proceed forward. We are in question number 2. Looks like a charitable question. Anyway, what I'm going to do is I'm going to read the questions first, and so see that we understand what is happening. Sevaniketan wants to avail exemption under section 1023C 3AD and 1023C 3AE in respect of an education institution and hospital for 23-24. Can it do so? Something about the turnover limit questions is given. Next, what is the amount of corpus donation received by the World Trust would not form part of total income? So what corpus donation would be exempt? Okay. What would be the amount of specified income which is taxable at 30% under section 115 BBI? Okay. What is the amount to be considered as application of income for the trust, excluding the unconditional accumulation, assuming it has fulfilled all relevant conditions? So application related question. And finally, two more are there. No, last one. Sevaniketan claims that anonymous donation received during the year is not liable to taxes. So some anonymous related question. Yes, this is what the background is. Let's now read the case study, see what we understand. It says, Sevaniketan is a charitable trust which is registered under section 12AB, runs an education institution which is engaged solely in education and hospital for the treatment of persons suffering from mental disorder solely for philanthropic purposes. Okay. The trust is furnishing the following information. The total receipts of the trust for the previous year 23-24 for education institution is given as 3.1 crores and hospital is 3.4 crores. Now this is your MCQ number 1. They're asking that they want to claim exemption individually for hospital and individually for education. Can they do so? No. The provisions of charitable organization come and clarify that when you are running both the trust, both the hospital and education, the total turnover of the whole institution should not be more than 5 crores. If you notice, it is 3 crores and 3 crores, total has become 6.5 crores, meaning you will not be eligible for exemption. So I can straight away go to question number 6 or 7 and I can come and say answer is C. Answer is C. No, it cannot do so since the aggregate receipts from education and hospital is exceeding 5 crores. So option number C is your answer. Okay. Sweet. Next. Voluntary contributions which is included in one above received for the previous year 23-24 from the public amounted to 105 lakhs. So you have received a total donation of 105 lakhs which is a part of the receipts above. Okay. This also includes a corpus donation of 55 lakhs which is brought in specifically for the purpose of purchasing a building. So this 105 lakhs also has 55 lakhs which is brought for corpus purposes and is for receiving a building, and anonymous donation of 20 lakhs. So in this 105 lakhs, 20 lakhs is an anonymous donation. Now this can be answered straight away. The question is coming and saying that you have an anonymous donation and the person was requesting that he wants to treat this as non-taxable. Now let's check whether it is non-taxable or not. Provisions of anonymous donation come and say that if you have an anonymous donation received, you can treat an anonymous donation as normally taxable up to a number of 5% of the total donation or 1 lakh rupees, whichever is higher. Whichever is higher. Let's look. The number is 105 into 5% will become 5.25. So you can only treat 5.25 lakhs as a normal donation. Anything beyond 5.25 lakhs will become taxable. Total donation he got is 20 lakhs, which means his anonymous donation taxable at 115 BBC rate is 14.75 lakhs. This 14.75 lakhs will be taxable at the rate of 30%. Number becomes 4.425. So 4,42,500 rupees. 4,42,500 rupees. Check question number 11. It says Seva Niketan claims that anonymous donation received the year is not liable to be taxed. Is the claim of the trust valid? Answer is no. If not, determine the tax liable. It is no and 4,42,500. No and 4,42,500. Best way to do case study by reading the questions first and then going to the case study. You will get a better grip on things. Let's proceed forward. They're saying during the previous year 23-24, computers purchased for 80 lakhs out of corpus donations mentioned in 30 lakhs. So they're saying that Rahul, in the current year, what happened is I used up a application. Now this is going to answer one of the questions where they said, tell me how much is the total applications you have made. Yes, they're saying Rahul, during the current year, you have made a computer purchase for 80 lakh rupees out of the corpus donation mentioned in 3 above 30 lakh rupees. Notice the line very carefully. It said that the corpus donation which has been bought for you is for purchasing building. You have bought a corpus donation for the purpose of purchase of building and now you're using it for the purpose of computers. Can you treat this as application? Answer is no. 100% no. This cannot be treated as an application. More so for the fact that because the conditions have been violated. This will also be taxable under the new section 115 BBI at the rate of 30%. This is also going to become taxable at the rate of 30%, 115 BBI, which means now there is a challenge. With the corpus donation not being used for the purpose it is being brought in for. This is a specified violation and will be liable for 30%. More so, because it is from the corpus donation, it will not be exempt also. You cannot treat it as application. Proceeding forward, you have taken corpus, you have purchased the computer of 80 lakhs by using 25 lakhs of loan. The current year amendments, if you recall, last year amendments, if you recall, the provisions come and say that if you have taken a loan for the purpose of application, the loan use will not be treated as application. You can only treat the payment of the loan as an application, which means this also will not be treated as an application. Proceeding forward, during the previous year, computer purchase for 80 lakhs by using 25 lakhs of voluntary contribution. Now this is your actual application. So in my application scenario, I will first come and say payment of 25 lakhs for my application. Proceeding forward, the corpus donation which is received during the current year The corpus donation which is received during the current year has been invested in follows. Now this is going to answer your corpus donation, which ones are exempt. Which ones are exempt? Because if you recall, corpus donation provisions come and say that corpus donation can only be treated as exempt if it is used and invested in 11.5 modes. If it is used and invested in 11.5 modes. Now we already know that the corpus donation was how much? It was 55 lakhs. But in that 55 lakhs, 30 lakhs you used for computer, which means you have violated the conditions there itself. So 30 lakhs is never getting exempted. Look at the balance. Look at the balance. They are coming and saying the corpus donation balance has been used for post office savings. Approved mode, therefore exempted. Has been put in Canara Bank as fixed deposit. Investment in scheduled bank, approved and proceeded. Non-banking financial corporation is not notified in 11.5. Is not notified in 11.5, which means the only items which you can claim as an exemption for corpus donation is the first two items, which will total to 15 lakh rupees. In simple words, out of the total 55 lakh rupees, 30 lakhs used for computers, not exempted. 10 lakhs used for post office, exempted. 5 lakhs used for fixed deposit, exempted. But the 10 lakhs used for NBFC is not exempted. So the total corpus donation which is going to be exempt for you is 15 lakh rupees. Is 15 lakh rupees. Yes. Let's look at what are the balance questions left. The balance questions are, what would be the amount of specified income taxable at 30%? Yes. So I already know one of those, which is my computers. Let's check the balance. Deposited 15 lakhs towards post office savings account, which were utilized for the purpose of purchase of building for the previous year 21-22 and 22-21, 2021 out of the corpus fund 10 lakh and 5 lakhs. Let's hold that. Before even we go there, let's also clarify this fact that the non-banking financial corporation deposit is not a permissible mode. Is not a permissible mode. So putting a corpus donation in a non-permissible mode is also a specified violation, which means this also will be a specified violation. So now I have two specified violations. One is my computer purchase of 30 lakh rupees and one is my non-banking financial deposit of 10 lakh rupees. Yes, keeping that in mind. Next, you have deposited 15 lakh rupees towards post office savings, which were utilized for the purpose of purchase of building in 2021 and 21-22 out of corpus fund. So what had happened is the corpus fund money which you had, that corpus fund was used for purchasing buildings. That corpus fund was used for purchasing buildings in 2021 and 21-22. 2021 and 21-22 without even making the deposit. Later on, what happened is, because you realized your mistake, you went ahead and you deposited this money now in post office savings. The taxable income which you got in the current year, that you deposited in post office savings. What has happened is income tax has come and clarified that if you have a corpus donation which has been treated as application earlier, because of violation of conditions, because of you not depositing in 11.5 modes, don't worry about it. In the future, whenever you take a taxable income and put it in 11.5 modes, you can assume that the subsequent transaction is a corpus donation, and therefore that payment will be called as application. However, the challenge which has come is this provision only came in from 1st April 2021, which means in this scenario, if you notice, 2021 and 21-22, 2 years are there. Now for 2021, this provision was not even there. This amendment was not even there, which means at that point of time, even if corpus donation was not put in 11.5 modes and was directly utilized also, there were no challenges. Everything was permitted, which means for this 10 lakh rupees, I will not get any exemption today. I will not get any application or exemption today because it has already been used in 2021 itself. The only number which I can claim as application in the current year is the 5 lakh rupees. Why am I doing it, Rahul? Because very simple, in 21-22, when you had taken a corpus donation and you had put it in building, you would have not got the application. But today, since you have taken a taxable income and put it in a 11.5 mode, you will now get an application of the 5 lakh rupees. So I'm going to add this application of 25 lakh rupees, 5 lakh rupees to my 25 lakhs. Proceeding forward. An amount paid to another trust registered under 12AB by way of donations is 10 lakh rupees. Out of the said amount, 2 lakhs were given as corpus donation. So now what has happened is the taxable income which you have in the current year, 10 lakh rupees was the taxable income. In that 2 lakh rupees you gave as corpus. Now the provisions are very clear to say that if you are going to have a taxable income and you are going to give it to someone else, if the money is going to him for corpus donation, then it is not an exempt income for you. You cannot treat it as application. So which means the left off amount is only 8 lakhs. Which means 8 lakhs you've got as taxable income, you're now giving it to the fund. Now provisions is generally 8 lakhs rupees would have been called as full application. But current year amendment now comes and clarifies that whenever you're giving an amount which you have received as a donation to someone else, as a donation to someone else, only 85% of it will be called as application in the other person's hand. Only 85% of it will be called as application in someone else's hand. So you take the 8 lakh rupees, multiply by 85%, only 6.8 lakhs is what you can consider as application. Only 6.8 lakhs is what you can consider as application. Yes, please be very wary of your amendments of the current year. That is most critical. That is most critical. Last item. 6 lakhs being an amount set apart in the 22-23 by the trust for charitable purposes under 11.2 is utilized in 23-24 for making donation to another charitable trust whose object is also education. In 22-23, you are not able to utilize your whole 85% as application, and therefore you had set apart some amount. You had set apart certain amount. That set apart would have been done for some specific purposes. Yes, provisions came and clarified that if you're going to set apart an amount and you're going to use it for specified purposes, it has to be used in a period of 5 years. In a period of 5 years. But what has this person done is this person has not used this amount but directly given it as donation to someone else. Directly given it as donation to someone else. That is a violation. That is a violation. Provisions of income tax come and say that if you have accumulated some amount for setting apart and using it in the future, you cannot use this amount for making donations to another person. If you do so, then the amount will automatically be treated as income for the current year. Also for the fact that it will be a part of specified violation and therefore will be taxable at 30% rate. Which means this whole 6 lakh rupees is now going to be added to my specified violation. Is going to be added to my specified violation. Now there is no application relating to this because this is a violation of condition. Current year income, there is no expense against it. Yes, so it's a current year income. This 6 lakh rupees will be added to my specified violation. I now know both my numbers. My application number is 36.8 lakhs. And my specified violation number is 46 lakhs. Let's check my questions. What would be the amount of specified income taxable at 30% under 115 BBI? Number is 46 lakhs. What would be the amount will be considered as application of trust for the 23-24, assuming that it has fulfilled all the conditions? Number is 36.8 lakhs. 36.8 lakhs. If you are strong on your concepts, the answers will automatically flow. It was fairly a straightforward question, but some very good intricacies were there. You have to be extremely careful about your intricacies. As such, the answers are simple. We are almost about 30 minutes past and we have completed 2 case study scenarios. Yes, I know this is a little lengthier than what we are supposed to do in exams, but because I was explaining it to you, it takes some additional time. In exams, if you are more crisp and clear on your provisions, you should be able to do it faster. That is what the idea is. Anyway, let's make up for our lost time in the balance MCQs because the balance ones are going to be quite straightforward. Yes, let's look at question number 12. It says ABC Bank is providing you the following information relating to cash withdrawals by 2 of its customers. So ABC Bank has 2 customers. One is Mr. Arjun, one is Mr. XYZ Cooperative Society. Yes, the cash withdrawals dates are given to you. The cooperative society is regularly filing its return of incomes. However, Mr. Arjun has not been filing his return of incomes for the last 3 years. Would cash withdrawals by Mr. Arjun and Mr. XYZ Cooperative Society be attracting TCS or TDS? If yes, how much of the TDS will be done? We are now under section 194N. We are now under section 194N. 194N comes and says that when you go to a bank and you withdraw your cash, after 1 crore rupees, the TDS will be 2% rate. However, if you don't file your returns on time, what will happen is from 20 lakh rupees itself will be 2%. After 1 crore, it will become 5%. However, current year amendment comes and clarifies that if the withdrawal is happening by a cooperative society, wherever you saw the word 1 crore, the number will now become 3 crores. The facts are now coming and saying that cooperative society has filed its returns properly, which means cooperative society limit is 3 crores. Up to 3 crores, there will be no TDS. After 3 crores, there will be a TDS. Let's check. 68 lakhs plus 85 lakhs plus 88 lakhs plus 57 lakhs. Number is coming as 298 lakhs, which means it is less than 3 crores. TDS on this will become 0. So TDS on cooperative society is 0. Now by this itself, what I can do is I can do an elimination method and see which one is the right answer. Option number A has a TDS for cooperative, so no. B also has, C also has, D does not have a number, so therefore D is the right answer. But yes, for your understanding, let's do this also. On the left side, number is 20 plus 25 plus 35 plus 25. Number is coming as 105. Which means 1 crore 5 lakhs. Now I told you for the what will happen for the 20 lakhs to 1 crores, which is 80 lakh rupees, the TDS will be at the rate of 2%. For the balance 5 lakh rupees, TDS will be at the rate of 5%. Check the numbers. 80 lakhs into 2% number is 1.6 lakhs. 5 lakhs into 5% is 0.25 lakhs. So total is 1.85 lakhs. 1.85 lakhs. Compare it with point number D, which is what is right. 1.85 is what they have also given. Yes, sometimes elimination methods makes more sense if you are able to solve it faster. We will be able to complete some faster. Anyway, question number 13. Blossom Tea Garden is a tea estate in Dibrugarh, Assam. Received a 23 lakhs as compensation from an insurance company for severe damage to the green leaves due to hailstorm in July 2023. So there was some tea garden whose products were damaged because there was a hailstorm. They got an insurance compensation of 23 lakhs. Blossom Tea Estate is of the view that the entire receipt under the insurance policy for damage caused by the hailstorm to tea leaves will be agriculture income and hence would not be chargeable to tax. Examine the contentions. The person is coming and saying the 23 lakhs which has come to me is an agriculture income to me and therefore I don't want to pay any tax on this. What is your views? Let's look at the MCQs and then let's figure out if the right answer is what. Option number A comes and says Blossom Tea Garden's contention is incorrect. Entire compensation will be accessible as IFOs. I don't think so. Understand, the compensation which you have received is against your sale of your products. It is as good as you coming and saying that you have taken your products and sold it off to the insurance company, for which insurance company has given you money. Yes. Will it be taxable as IFOs? Definitely no. Answer is no. I don't see this as the right answer. Blossom Tea Garden contention is incorrect. Entire compensation is accessible as manufacturing income. Nowhere in the question did they clarify that there is any manufacture happening. Yes, just because you have got a loss of a product and you've got an insurance compensation does not make it a manufacturing activity. Definitely not. C. Blossom Tea Garden's contention is incorrect. It's deemed to be profit on sale of standing crop or the produce. Therefore, the same is taxable as PGBP. Blossom Tea Garden's contention is incorrect. It is deemed to be profit on sale of standing crop or the produce. Hey, if it was a profit from a sale of standing crop or produce, that is as good as agriculture income only. Yes. At the end of the day, the product was an agriculture. Tea product was an agriculture. So therefore, you cannot tax it as PGBP, which means answer should be D. Now read D. It says Blossom Tea Garden's contention is correct. No part of the compensation consists of manufacturing, like we discussed. It cannot be a portion under Rule 8 between manufacturing and agriculture because there is no manufacturing and therefore the income should be agriculture. I fairly think this is the right answer. This is what would be the right answer because understand there is a tea product, damaged, sold it off to insurance, got an insurance money back. It is as good as you selling it to the insurance company, which means had you not sold it to insurance also, it would have been agriculture. If you're selling it to insurance also, the fact will not change. It will still be agriculture. Option number D looks like the better option. Yes. And great, with this we are done with your MCQ questions. I'm going to quickly see what are the balance questions. I'm looking at question number 14, overview level. It looks like this is a total income question. Yeah, the total turnover is given to you. You are required to compute the total income and tax liability, company related question by ignoring MAT, is it? So they've given you MAT credit also, which means you have to do 115 JB. Great. Then you have Sanjay, resident of India, impressive investment portfolio. He has redeemed the entire mutual fund portfolio and brought a villa. Oh, great. Which means you're looking at section 54F. You're looking at section 54F. He has some mutual funds. He has sold the mutual funds and bought a house. So therefore, it is section 54F. The only thing which you'll have to be smart in this question is that 54F is only applicable on long-term assets. Yes, which means if the asset is not long-term, you'll have to check, debt mutual fund or equity mutual fund. What is the period of holding and everything? You have to keep that in mind and then you have to check whether it's long-term asset or a short-term asset. But looks like a very interesting question. Please do solve it. Solve it. Don't read the answer. Solve the question from your knowledge and then figure out what mistakes are making. I'm assuming they will have also tested your amendments of the current year, which is the market link debenture and the specified mutual unit funds. If that is being tested, then this will be a very good question for you to practice. Please do solve this question from your side. Then only go and look at the answers. Next, the Commissioner of Income Tax has issued a notice to revise the order. Theoretical question. In respect of Mr. Naksh, who is engaged in the export of fabrics, information is flagged as per risk management. In case of Mr. Ramesh, who is engaged in trading of commodities, a search is initiated. Can assessing officer issue notice for a search case? Again, this is all assessment related theoretical questions. Mr. Rohit is an Indian citizen, returned to India to assume the role of CEO, served in his capacity on 1st April to 31st March. Prior to this, he was working in Reading, USA. Looks like a DTAA question. Let's check. He went to USA to rejoin Red and permanently settled there. Rohit visits India every year on 1 month during his stay. It was found that he was a CEO of ABC Private Limited. He has undisclosed income. Oh, okay. Okay. This is an undisclosed income question, which means this is a new chapter, Black Money Act. This is your Black Money Act question. Please do solve this question. This will also be very good questions. I remember telling in the class that when it comes to black money, there are only 3 topics which are relevant. Check which of the 3 topics this one is. If it is one of the 3 topics, then you should be able to answer it on your own. Please check it from your side. Black money question. Next, Mahesh, age 50, CEO Silver India. Income is consisting of salary, interest on banks. He has the following income from country. This is definitely DTAA question. Dividends are given, short-term capital gains are given. India has a DTAA with country A, and the tax paid in country A is eligible for tax credit in India. The fiscal year for the income tax is same for both. The rate of tax is 20%. Country A in respect of all incomes. Income tax was paid by Mahesh for the incomes for the previous year ended 31st March 2024 in country A. The compute the total income and the net tax liability, assuming Mahesh has paid tax under section 115BAC. The one thing which I want you to be extremely careful when it comes to DTAA question. Normally, when you see a double taxation relief, it will always be non-DTAA, which means section 91 questions, where we will come and say it is lower of the rate of tax in India and rate of tax in foreign. It will be lower of rate of tax in India and rate of tax in foreign. However, when it comes to DTAA, DTAA will decide how the credit will be given. Notice the line, it comes very carefully. It says, India has a DTAA with country A, and the tax paid in country A is eligible for tax credit in India, which means when it comes to these kind of provisions, you have to claim the whole of the tax credit. Now it is not about the rate of tax, it is about the number. It is about the number, meaning what you will do is you will take all your double tax incomes, whatever the incomes which are given on the top, to the extent they are doubly taxed, on that you will multiply 20%. That number will straightforward be given as a credit to you. That number will straightforward be given as a credit to you. You will not come and check whichever is lower and everything. That's not the criteria, because DTAA comes and clarifies that you can claim the whole credit. The only criteria which you need to keep in mind is it should be a doubly taxed income, meaning the same income should be taxed in India, the same income should be taxed in foreign country. If the foreign country has some expenses and all which you are claiming in India, that does not become a doubly taxed income. On that you cannot claim your credits. On that you cannot claim your credits. Beyond that, just be careful about the fact that the whole tax which you pay in that country will be eligible as credit in the current year. The challenge which you need to keep in mind is there is TT buying rates given to you. You need to be very careful about which TT buying rate to be used. Please refer rule 128 before you start the question. Of late, ICI has become very fancy of these foreign cases, and therefore they are giving you multiple TT buying rates. You need to be extremely cautious of which TT buying rate you are using and appropriately use the rate. Please refer rule 128 before you start this question. I think this is the last question. ABC Private Limited, Bangalore, is engaged in the manufacture of electronic goods and exporting the same to various associated and other enterprises. The report with respect to international transaction with AE has been furnished for all years. The company has applied for APA. Oh, very good. The company has applied for APA in respect of the transactions to its AE. Application was filed on 15th Feb, which was signed on 5th May. The company has also applied in respect of the international transactions to which APA applies for rollback benefits. So now they're talking about rollback conditions. If you remember the rollback conditions, we discussed about the fact that when it comes to rollback, the years for which you're making a rollback return should be filed on time. The rollback should not result in an increased income beyond what you have claimed in the return of income. All those criteria has to be kept in mind. And yes, if you have a transaction covered in that year, then you have to mandatory do rollback for that period. If the transaction is not even there in that year, then you don't have to do rollback for that period. But it is all or nothing. It is all or nothing. You cannot pick and choose. I think the question should be relating to that only. If you read the facts of the assessment years, you will understand which years can be eligible for rollback and which years cannot be eligible for rollback. Yes, fairly this is what your RTP looks like. I personally loved all the questions which are there in RTP this time. It will really test your knowledge and skills. For those of my friends who have written November 23 or earlier and have unfortunately not been able to clear, consider this RTP as a test paper for you. Solve it as if you're writing an exam and see where you stand. If at this point of time you feel like this is not the kind of paper you're able to solve, it means there is some lack of preparations which you need to reimagine and do it once again. Yes, that again does not mean that you start over the whole exercise and you start from the scratch. No. For all the questions which you are not able to answer, take those topics alone and read it once again. Please make sure that whenever you have your concept guide, you also make markings against it so that you are also aware that yes, this is a mistake which I made in the past and I will not make it in the future. Scribble your material in such a way that you are comfortable to the extent that you are able to identify what are the mistakes which you have made in the past and which you want to correct in the future. Other than that, please don't redo the whole exercise once again. Yes, now this is not the tip for direct tax alone. This is a tip for every subject for that matter. Focus on every subject, explicitly on the multidisciplinary case study subject, because even now ICA has not clarified how this model will work. They have not clarified how many materials you need to carry and everything. But looking at the questions, it looks like you need to carry all your materials for your exam. So carrying a bulk suitcase only is what the best criteria would be for multidisciplinary case study as of now. I'm trying to be funny. Point is, I know ICI will have to clarify it in the future because it is not practically possible for everyone to carry suitcases to exam. Let's wait and watch for that. But regardless of it, please to solve the RTPs for multidisciplinary case study as well, keeping in mind your other subjects. You can refer your other subjects and then solve that MCQs, but please to solve that also. Don't wait for the notification to come because you're just wasting time. We're almost about, as we speak today, it's 13th February. We have about 2.5 more months for your exams to start. Yes, ignoring the fact that there may be an extension because of elections and everything, keeping everything intact, you have 2.5 months for your preparations to start. Please to keep your preparations intact and start doing it properly. Don't lose any subject at this point of time. Every subject is important, especially for May 2024, because it is almost going to be an easy paper considering the fact that it's the first attempt of the new syllabus. Keeping that in mind, please practice yourself well. With this, we conclude today's RTP discussion. I will be coming back with you all with the balance revision topics and the amendment lectures for CA final. Please stay tuned to the channel. If you have not subscribed it, please do subscribe it. Not for any views and news and all that. It will be helpful for you so that you get a notification in the future whenever we are doing it together. Yes, and for all of your friends who are waiting and expecting some videos relating to your RTPs and discussions, please do share it out to all of your friends so that everyone can enlighten themselves and be happy with the knowledge. That's it from my side for today, people. I will see you all very soon. Take care.